go ahead and start, and then we'll just acknowledge when Jerry Seebach is able to join us. So I think we'll go ahead and call the meeting to order. And Amanda, if you could do the roll call.
Absolutely. Committee Member Rangel.
Here.
Committee Member Rickard.
Here.
Vice Chairperson Darris.
Here.
Chairperson Bourbeau.
Here.
4 present. Thank you.
All righty. Well, our first item is the consent calendar, which consists of the minutes from last week's meeting. Does anybody have any questions on the minutes or any corrections to the minutes from last week's meeting? And any public comment on the consent calendar? Okay, seeing none, we'll go ahead and ask for a motion on approval of the consent calendar.
I'll move to approve.
I'll second.
We have a motion by Mark DeRiz, a second by Rochelle Rickard. Can you please call the roll?
Certainly. Committee Member Rangel.
Yes.
Committee Member Rickard.
Yes.
Vice Chairperson Darris.
Yes.
Chairperson Bourbeau.
Yes.
Motion passes.
All righty. So now we are at public comment, and this is for items that under the purview of the Finance Committee, but not on the agenda. So I want to open it up to public comment. If you want to comment, you'll have 3 minutes to speak. And I think since our public members are able to speak right now, just raise your voice and begin if you have a public comment. Okay. Seeing no public comment, we will close public comment and move on to our business item, which is review of general fund revenues. And I assume we're going to start off with our Administrative Services Director, Jerry Rangel, for that.
Yes, thank you.
You could. Thank you, Charles.
Hi, Jerry.
Hi,
All right, very good, Jerry. We can hear you. I assume you can hear us.
hear who?
So Amanda, if you could make note that Treasurer Seebach joined the meeting at 3:04.
Absolutely.
And Jerry, all you missed was the roll call and the approval of the consent calendar, which was last week's minutes.
Okay, thank you. Sorry, Charles. Once more, a little better than last time, though.
I was going to say, believe me, technical problems, I totally understand.
Can you all see my screen?
Yes.
Yes.
Excellent. Okay, so today we are going to go over the revenues that fall under the category of general funds. And as you probably all know, general fund is, the city has a number of different funds due to restricted types of uses. So the general fund kind of holds all of those funds that are able to be spent on general city services. So they're the least restrictive of all of the city's funds. So this is where all of the kind of the main funding sources from property tax and sales tax and that sort of thing go. So I'll just kind of go down the list of it. It's quite a lengthy list. There's 9 pages, I believe. So please ask any questions that we have along the way, and I'll try my best to answer those. So we'll start off just kind of giving you an update on how this worksheet looks. So this is kind of the description under this taxes section here. This is each grouping and the detailed grouping, and then the prior to fiscal years. So these are what actually brought in 1819 and fiscal year 1920. And then this is the budgeted column for the current year, 2021. So this would tie out to your budget document plus any adjustments that council has made along the way and some encumbrances and things like that. So the ones that we're looking at, the 2021 projected is where we think we will end the current year, and then the next 2 fiscal years, 21, 22, and 22, 23. So we'll go ahead and get started. So property tax is at the top of the list. It is, property tax in total is still our highest component of our general fund revenue. So this is the tax that you pay on your property, your home. It is limited by Prop 13 to be 1% of the value of your property, which is determined by the county at the time that you purchase it. It can go up no more than 2% per year. And in some instances, like we had with the Great Recession, you can request that the county reevaluate if you think that the value that you're paying on is much higher than the actual market value of your home. They can do a Proposition 8 adjustment and reduce that value down. So you get the fee is 1% of that value that's calculated by the county. The county does bill that, and it's paid in 2 increments in December and April, or due, I guess, in those 2 increments, and then forwarded to the city. The city is on the teeter plan, so if there is an individual that is unable to pay their taxes, the city still gets the funds, and then the county kind of pre-funds the city and then keeps any of the penalties and interest that would be on that. What was the other piece? Oh, some people look at the value of their property and what they pay, and they say, wow, the city's getting tons of money. I just want to clarify that the city doesn't get the entire value of the property tax. So we get probably somewhere around 16 to 17% of what is paid in that valuation cost. It's split with a number of different agencies, and our city is kind of divided up in different sections, and they're a little bit different, each one of them, but it's right around 16 to 17% of that amount. So just to clarify, we don't get the entire amount there. So we are expecting some increases in the current year and going forward. The county is projecting a 4% increase for next year countywide. So that kind of varies depending on what is going on at each individual community. So in Atascadero, we have a pretty substantial amount of development coming online, where we have a lot of housing projects, a lot of commercial. So all of those will increase the base value of the property, and then so that will in turn increase our property tax revenue. We also have the effect of the RDA is there, the redevelopment agency. So when the redevelopment agency was dissolved, we still get some distributions from that. First, it's the amount that would have gone to the redevelopment agency meets all of the obligations that we have, so that required obligation payment schedule the council adopts every January is the first bite out of that redevelopment money, and then the city does get some of the distribution if there's any left off of that. So that is divided across the agencies as well. Property tax in lieu of vehicle license fees. So
Jerry, can you back up a sec? So the RDA pass-through reflected as a negative number here is what? That's a negative, I mean, because that's going through to cover our ROPS obligations, or what? Why is that a negative there?
Rochelle, can you help me explain that one a little bit?
Yeah. So that is actually the amount of increment that the city would have got if there was no redevelopment agency. And so it comes through as a negative on the bill. Then the city will get a pass-through back, which is a positive that gets lumped into current year secured. And then, they get that pass-through by right. So in the ordinance, there's something that we get, our share of a portion, our share of 20% of the increment for tier 1. So that amount will come back through as a negative, and that's lumped in that current year secured number. And then we also get, after the RDA pays all their obligations, whatever's left is split between all of the taxing jurisdictions. And then that's that positive number there.
That's the RPTTF.
Yes.
Okay. So I guess I've not noticed in the past this significant negative number as the RDA passed through.
Yeah.
Because I mean, it makes it appear as if RDA is costing us a net of 400,000 a year.
Yeah,
Well, it sort of is.
it is.
So, and that's because, I mean, that's the increment, because the increment's being taken off the top in essence.
Yes.
Okay.
And it's the 400,000 is our share of the debt service payments, if you want to think about it now.
Yeah,
'cause that's all
yeah.
that's left. Yeah.
Okay. Got it. Okay, I'm sorry. Go ahead then to the property tax in lieu of VLF.
Okay, so the state did a number of different changes in their income. So, oh gosh, when was it? Around 2000, between 2000 and 2005, I think the state had additional money, so they reduced the value of the vehicle license fee to individuals paying that on their vehicles to the DMV. But part of that money was going to the city. So the state then backfilled that money with this property tax in lieu of VLF. And I think in the 2005-06 timeframe, that became property tax essentially. So it kind of became a part of it and it grew with property tax versus kind of being based on vehicle license fees.
And when that was adopted, Jerry, it wasn't anticipated to be a forever thing, but it feels like it's evolved into a forever thing. So there's no changes anticipated with that. It looks like it's just going to grow a little each year.
Right.
Okay, thank you.
Current year unsecured, those are, that's the tax on things that are not secured, like property, like a home or a business. This would be things, I believe under, it falls like boats and mobile homes and things. Is there anything else, Rochelle, that kind of falls under that category you can think of?
No, I think, yeah.
That type of thing. So that's the tax on that. Current year supplemental. So in the event that like a house is sold to somebody else, the county will do a readjustment of the base value at that time. Or if there's an addition that's added onto the house that gives it additional base value, those are kind of catch-up payments for that. So those generally have a little bit of a lag time. By the time that the sale is completed, information kind of goes to the county, gets updated, and that funding comes to us. So it does have a little bit of a lag, but you'll see this increase in particular in this kind of time frame where people are buying and selling quite a bit as people are moving out of the more urban areas to rural areas like Atascadero. We're seeing a lot of that type of movement in the real estate market.
Jerry, I have a quick question. If we can back up just one step on the current year unsecured line. On the 2018-19, it was at 162, and then let's see, 2019 and 20 it jumped to 272, but budgeted 162, and then it stepped in a $260,000 range beyond. I'm just wondering why the up and down.
It is just that type of items. So it's kind of one-time things for sales. So catch up on, you know, if 100 people sell their house and they're all revalued versus 10 people, or, you know, if people are adding on to their homes, or sometimes I think it can be a delay in timing. So these things are occurring, but maybe there's a big glut of them and county doesn't have time to process all that as well.
Jerry, I think he was asking about current year unsecured, not supplemental.
Yeah, oh yeah, the unsecured. 'Cause I noticed that it was at 162 and then 272, or yeah, and then we're budgeting 162, but expecting or projecting 267. So why aren't we budgeting higher?
So the budget that's there from 2021 was 2 years ago at this point in time, what we projected we would be. This is another one of those items that does kind of go up and down, but that 162 is from a 2 years ago standpoint. So it's a little bit of a historical thing. Since then, we've gotten additional information that says that that might be going a little bit higher.
Okay, that makes sense now. I didn't realize that number was derived a couple of years ago.
Yeah.
Thank
And-
you.
Yeah, Mark, if you look at the RDA pass-through up a couple lines, it's the same thing.
All right, okay.
It was projected to be down in 2021, then it turned out to be up a little bit. I suspect that 2 years before they thought the economy was going to be flat or something like that, or even take a dump. It turns out that growth, at least in property taxes, continued. So yeah. Also, Charles, the reason that RDA pass-through is growing is 921 and then 947 is because there is construction and growth within the part of the city that's in the RDA area. So when they
Yeah, I guess what I didn't.
build something in that area, then you get significant growth in that.
Yeah, I guess what I didn't realize is that I thought with the abolition of the RDA that the supplemental kind of stopped growing and that new additions in the area that would have otherwise added to the supplemental stopped doing it because there was no RDA. But you're saying that within our designated RDA area, there's still, you know, a supplemental or a,
The
Yeah,
calculation of increment, yeah.
increment, that sort of.
And someday, when all the bonds are paid off for the RDA, then that all will go back, most of it will go back to the city, but some will get smooshed out to other agencies. So-
Right. Like I said, though, I thought with the abolition of the RDAs, there was no more additional increment. You know, it was kind of stopped cold, but apparently not. That's interesting to know. And so before we leave property tax, and I also want to note we see the new friendly face of Jeff Oslin arriving as a member of the public. And Jeff, this, you know, we don't have a lot of members of the public, so pretty casual. If you want to speak, just kind of raise your hand. We'll let you speak. And before we leave property taxes, where is the revenue for the CFD or the Mello-Roos assessments? Is it included in current year secured, or is it included somewhere else that we're not seeing here on this page?
So that actually comes into a separate fund. So that is the Community Facilities District Fund. We haven't seen that one yet just because the cost, there is a May 1st, not deadline, but kind of time marker in that district. So we need to kind of get on the other side of the May 1st to calculate what the fees might be. And plus it's kind of based on the staff costs. So we do that calculation to determine what the increase will be based on the increase in staff costs. So that number is kind of shifting around a little bit as we finalize some of the other things. So we'll bring that to the committee.
And then is that revenue transferred into the general fund to cover those expenses based on when you determine what those expenses are?
Right.
More or less? Okay. All right, thank you.
And the revenue piece, yes.
Thank you. Go.
We'll see that contribution in a little bit. I did want to note too, as we're going through this, some of the numbers on some of those items, like we just discussed with the CFD, and we have a lot of allocations of staff time overhead to the other departments, the wastewater fund, transit fund, some of those things. And as our labor dollars change and shift, as we kind of finalize things with negotiation process, those numbers will change. It shouldn't be, significant. What the page that we're looking on now is the bulk of all of the city general fund revenues. Certainly those other ones will change a little bit. And if the committee would like, we can bring those back when they're finalized. But just to know that some things might shift slightly. So I'll look to your feedback on whether you would like this back or not, or how you'd like to address that going forward.
Okay.
Hey, Jerry, I have a question for you, and it's on TOT.
Sure.
Is that a pretty good projection, or does that need to be adjusted based on the first 6 months of the pandemic?
I feel pretty good about the projected number for the current year. Certainly the next 2 years, who knows exactly what's going to happen. I mean, there are best estimates given the information that we know, talking to people, trying to understand kind of where we're going on some of those things. So it does assume there is some impact still from COVID. We're still kind of climbing out of it. We did have, I want to say either in 22, 23 or in the next year, last cycle when we budgeted, we anticipated another hotel coming online in the downtown area. It doesn't look like that's probably going to be occurring, at least not in those years too. So that was adjusted for that. So I think,
I guess I'm more concerned with actual coming into 2021 because we know that TOT was horrible for the first 6 months of the year. Now our hotels are packed again. And we do have one new hotel online. It just seems like we might be over projected for our budgeted for this past fiscal year. And going forward, I think the numbers make sense. I'm just curious the feel on that if we need to make an adjustment.
yeah, I feel pretty good about that. We're just getting in the numbers from January through March. Those are looking pretty good. So we can adjust this somewhat if we see big changes in what we're getting in from the January through March quarter. But I feel like it's a pretty solid number.
Jerry, I've got a question on the breakout of F-14 funds.
Yes.
We have a kind of a short run on that. I forget, was it 10, 12 years of collection? And I'm just curious why you didn't break that out, because unless we renew it through the voters, it's going to go away.
Right, and so the F-14, because it was accompanied by the Measure E as well, and because the commitment to do that for roads, we have pulled that out in the budget and put it in a separate section.
Gotcha, okay.
So it is general fund, but we kind of report it separately.
Okay, good.
Jerry, and when I know we're jumping ahead, we got to get back to the sales tax, but on the TOT thing, we actually went, from 1819 to 1920, we actually went down kind of more than I realized. And is that, because then you look at, we budgeted 1.6 for 2021, which obviously has been hammered by the pandemic, but was considerably higher than our 1920 actual, but was budgeted back in 1819. Do we know what happened in 1920? I guess the beginning of 20 or the end of 20, the end of 1920, what got hammered by the pandemic. So maybe that was it.
Yeah, that was absolutely it. You're right.
And so, yeah, I'd say our numbers going forward are reasonably conservative, and not even up to what we had budgeted for 2021. So, okay. Got it. Well, let's
I got
get back.
one more for you on sales tax, general sales tax.
Well, Jeff, she hasn't actually talked about sales tax yet, so let's let her say what she was going to say, and then we'll ask questions.
So this sales and use tax here, this line is what we call the Bradley Burns sales tax. So that's the Atascadero's base 1%. So that is what we see on, or I guess the base before we get to the D20. That's what you see on your bill when you go to purchase things within Atascadero. Now, sales tax is pretty complicated depending on where you are and where things are shipped and the vendor's details. It's a little bit confusing on where the money goes all the time. Sometimes some of the money that is purchased on items outside of Atascadero can come back to us through the pool if it's being delivered to our homes, sometimes not, depending on kind of how things are set up. But this is our base 1%. You will see the sales tax measure, which is also 1%. is a little bit higher than our Bradley Burns tax. Now that's because if a Tascadero citizen goes to San Luis Obispo to purchase a vehicle, for example, San Luis Obispo will get that base tax of the Bradley Burns 1%, but we will get the override. So we'll get the D20 money and we'll get the F14 money. So F14 is right around 57, 58% of Bradley Burns. D20 is around 117% because we do get kind of capture some of those other sales that we wouldn't normally be getting Bradley Burns on. So that's why you're seeing more than the Bradley Burns on the D20 measure. So we are anticipating that we would get 1 quarter's worth of D20 money in the current year. We haven't seen any of that yet, so it's still being collected by the vendors, then it gets remitted to the state, CDTFA, California Department of Tax and something. And then it comes to us, so it kind of takes a long journey to get to us, but it will get to us by August, I think. So we'll start seeing that money in there.
So Jerry, I think you really answered my question of, how did you have such a good kind of projection for D20, but basically you based it on the percentage that we receive on F14.
Right.
57, 58%. Gotcha. Of current Bradley Burns. What's interesting to me on that is, we've talked about in the context of Measure D during the, the information sessions you had, $4.5 to $5 million, and the projection here is somewhat over 5 million. So this is actually a little bit more than we, than we originally talked about.
Right.
People are buying online a lot more, and I think that's a big part of the shift that we're seeing to that Measure D. So the 4.5 to 5 was based on our projections last May, April, May, while we're in the middle of the pandemic. So there's a little bit related to that, but this is even better than, if we'd taken last projections moving forward because of,
right. And
of those
to remind everybody, Rochelle, when people buy something online, the 1%, if it's collected, if it's from out of state, I guess, it goes into the county pool, but the D20 and the F14, we do get that, correct?
It depends on if you're buying from Amazon. There's a whole different rule, whole different law for Amazon. If you're buying from,
Right, okay.
It really just depends on where you're buying from and what the thing is. But
Right.
we don't get
if,
the 1%.
If I'm buying out of state.
Yeah.
Right. If the 1% comes our way at all, it goes into the county pool.
Yes. Yeah.
The Bradley Burns. Right.
And then we only
Okay.
get a fraction of that, because that is then the county pools are then allocated based on your share of the total percentage of sales tax in the county, which we don't have a very high percentage.
Right. Yeah. It's another way of ripping us off, I guess. Okay. And Jeff, are you back? Because you said you had a question about sales tax that may or may not have been answered by Jerry's discussion. Okay. Well, we'll let Jeff come back to that if he has a chance. Go ahead and move on to property transfer, et cetera.
Okay. Let's see. Property transfer tax, that's just on, as you would imagine, the sale of property, and there's a small fee there that comes through. Cannabis tax is newer for us. So this is delivery services that are outside of the city, delivering product into the city to our residents. So we've had a little bit of a challenge collecting on some of these. So there's a process they go through, they get a business license, they pay quarterly in theory. We have looked on different website type things, trying to determine who are the vendors that are bringing deliveries into the city. We contact them, let them know what the appropriate forms and everything that they need to do, because all of these vendors are regulated by the state. And the state's license makes sure that they have to, or requires as a part of that meeting their state's obligation, that they are also meeting the city obligations. And so hopefully they are doing that, but we are having problems with a few of the vendors trying to get payment. So the ordinance that we have right now, it doesn't have a lot of strength and capacity to be able to compel those payments. So we are looking to kind of make that a little bit more strong, so that we could have them get a special license that's just for cannabis related products for selling them in Atascadero. And if they're not paying their bill, we could cancel that or void their license, which then to the state, if we have a license like that, the state considers that not in compliance with local laws. So then they're out of compliance with their state license. So that's a bigger deal, as I understand, to these vendors than just not paying us, because the state doesn't consider that non-compliance. So we are, go ahead.
Well, on that, we the council recently agreed to allow not just physical deliveries, which had to allow, but they were coming from outside the city. We agreed to allow delivery services to be based in the city. Those doing business in the city, but let's say coming from Paso, they had to get a business license. But what revenue were they paying? Because I mean, if I called Paso and said, bring me some cannabis, called a service in Paso and said, bring me some cannabis, the point of sale would be Paso, and they would get the sales tax, which was, part of the council's rationale for, no, we should license, we should allow this within the city. I'm curious what the 30,000 in revenue is. Is it the tax on the cannabis itself?
Yes, so there's a 4% tax
Okay.
on product that's delivered into our city.
Gotcha. Not the sales tax, the actual cannabis tax.
Yes, that's the cannabis
Okay.
tax, correct.
Got it. And given that if, as a result of our action, and I know the ordinance language has gone through the planning commission, will probably come back to the council soon. So somebody could say, okay, I'm delivering in Atascadero, I want to set up a facility in Atascadero from which to make deliveries. If they did that, would that substantially increase the revenue enough that these projections, it'd be hard to project, I understand, but is it possible then that the numbers for like 21, 22, and especially 22, 23 might be substantially larger than 30,000?
I would have to look at the ordinance, but I think the fee is similar. So I think it's 4% of the product. So then it would just be a shift. Instead of people coming from out of town, you would have the in-town supplying it. So I guess it's whatever demand. I don't know that the demand is going to change if that happens. So I would say it's probably not a significant change. We're not going to see $250,000 out of this.
Right.
But you might see some.
Okay, because the real increase, assuming that demand is level, would be we would get the sales tax for anybody basing it in the city.
Right.
Okay, got it. Thank you for the clarification.
Sure. Any other questions on that section? Okay. All right, franchise taxes is the next section. So we charge franchise fees to all of these different utility servers, including ourselves for wastewater, to be able to provide services in the city. So cable television, PG&E, cable TV has been a little bit flat-ish. I kind of expected last cycle we'd see more of a dip with a lot of the changes to kind of the Netflix and those sorts of things, and as a social shift coming away from cable, but we really didn't see that. We're really seeing kind of just a flatness in that service. So that's kind of that one. Electricity, so we are seeing increases in PG&E in their fees to be able to pay for some of the recent fires and things like that, that they are having increases into their fees. And so we're seeing a little bit of an increase as well for PG&E.
And is the percentage the same on each of these? And I know there was some state interference, if you will, state preemption on how much you could charge on, I thought maybe it was cable or something. But what is the different percentages, if they are different, that we charge for the different utilities?
I would have to look. We have an agreement with each, I believe, so I think it depends on that and what's standard in the industry. Rochelle, are you familiar with those at all?
I am not. I know electricity is a very complicated formula that's the same statewide. I believe gas is the same. We did negotiate 5% in our waste management agreement, which again is probably on the lower end of the state.
Yeah, I thought it was 10.
Yeah.
10's pretty
And-
standard in the garbage realm.
Yeah. I'd have to look on Chicago Grade Landfill.
All right. Okay, hey, Jerry, before you, unless you're not done with utilities, before you move on, I wanted to go back to Jeff, see if you still had a sales tax question.
I have one sales tax question, and it's what I'm noticing, like at Miners, Home Depot, and my places, we're selling a lot more than we ever have the last few months. So do you think the projection on sales tax is pretty good based on it being down for a few months and then kicking back up, or do you think that could be adjusted up?
I mean, anything is possible, certainly, and we are seeing things come back, and is particularly in some of the areas, as you have mentioned. We do a pretty thorough kind of analysis by quarter and by industry type and business on kind of what's happening in each of those. So we do our best, and we get some help too from our consultants, HDL. So they have their finger on the pulse of a huge number of cities across the state. So they have additional information and some economists and things like that to kind of help project. But we do plug in, you know, if we are missing a retailer, if one goes out of business, or we're seeing trends in a certain area, that's all kind of plugged into the formula. So certainly it could be different, but I feel pretty solid. We usually are pretty close in our sales tax, given, you know, any huge changes in the economy that are kind of unexpected, like the pandemic, but generally we're pretty close.
Yeah, I
Good, thank you.
I think also, Jeff, realize that, you know, because Jerry and her folks and HDL, the company that does a lot of this analysis, where they look at it by industry, you find a trend that, oh, wow, this industry and maybe your industry is up considerably, but some other industry is down. And so there's a lot of offsetting that happens. And now if a given city is heavy on one industry, they might, you know, see a bump up or a bump down. Like we're way more heavily dependent than we would like on gasoline sales. And so our numbers can go up or down just with gas prices, much more than, let's say, you know, another city. So.
And that's a good point that I'd like to kind of bring back to the sales tax too. We would have seen much lower numbers, I think, in current year, except for the fact that we recently had that new legislation on the sales tax on the online purchases. So that bumped up the pool quite a bit. So we got a lot of sales tax revenue from the countywide pool because of all of the online purchases. And now we have this new rule that says that you have to pay sales tax on those items. So that really kind of covered a lot of the gap that we would have seen more substantial with the COVID influence.
All right, thank you.
Certainly.
Let's move along.
Moving back to franchise tax, I just wanted to note too, with the, as of January 1st, Waste Management took over the recycling piece. So we used to have a different company doing the recycling. So Waste Management would pick it up and deliver it to the other recycling company. But now Waste Management is doing that whole thing. So now there's no separate franchise fee for the recycling. It's all kind of merged up here with the garbage disposal agreement. And then, as I said, this is the wastewater fee we're charging ourselves. So that is a percentage of the wastewater revenue. We have been on a plan to kind of increase those wastewater fees over time since they were not increased in such a long time. So we're kind of trying to get back on track on that. So we are seeing increases to the general fund portion of those franchise fees. And then the last item here is the business license tax. So just what businesses will pay annually, or new businesses when they come in order to get their license. And that does it for this page. As you can see, it's quite substantial in our numbers. So it's the bulk of the general fund revenues probably. So happy to answer any other questions before we move on.
Yeah, I think the good news is we're done with the biggest, most important page. The bad news is it took us 45 minutes to go through one page. But on the business licenses, we've talked, I know you and I have, and Rochelle and I have, about how inadequate our business license, at least the tax piece of it is. I mean, it barely covers the cost of you doing the paperwork. And especially compared to some other cities like in SLO, this is a $5 million line, revenue line item, or at least a $3 million revenue line item. Are we still planning at some point in time to relook our business license tax, or our business tax, if you will, to try to make it a little more realistic, I guess you'd say?
I would love to. I think you bring up excellent points on that. I think it has kind of been the same for a long time. We haven't really increased it or done anything with it, but it's certainly, I think, something that we should put back on the list to do. I'll defer to Rochelle for additional information, I guess, on what her thoughts are on that one.
I think it definitely is something we should look into. It is a tax, and so it is subject to vote. I'm unclear exactly what that vote may be. We certainly focused on Measure D20 first, but that should be looked at too. Yeah.
Yeah, absolutely. All right. Okay, let's go ahead and move on to the second page, permits and fees.
Okay, so the permits and fees section, as you would imagine, is really related to the economic development, the development that's going around. So anytime anybody's building a business, a home, any type of thing like that, this is the portion of the permit fee that we incur. So this is reimbursement for city costs. So city staff, all the fees that are kind of related to that. So on that same note, we are in the midst of working on updating our service fees, which would or potentially could adjust some of the fees. So we have hired a consultant to come, and they do a very thorough evaluation of what each staff member does, how long it takes them to do that. It figures out exactly what the cost of providing each of these services is to the community. And then we bring that back to the council to vote on how they would like to adjust the current service fees for that. So typically, the council has taken the position that development should pay for itself. So we would set the fee at 100% of the costs that we incur for that. And recreation was it was determined that the fees for recreation were so high, it may prevent some families from using those services. So we were happy at that time, or the council voted to not charge the full fee to some of those services. So that could adjust some of these. We don't know what that looks like going forward, so we haven't included any kind of a service fee adjustment into these projections. But certainly when we come back with the service fees, we can, take another look at that.
Jerry, one question for you. Planning inspections, a very low dollar amount. And I see, a few pages down, we have, different fees related to what community development does. I guess I'm confused what a planning inspection is, that we only charge $2,000 a year, or, a very small amount per year. And you may not be the expert on that. Maybe more Rochelle might be able to answer that. What is a planning inspection?
There are some times that a planner will need to go out and do inspections for those things that might be in the CUP or the inspection plan. If they had a lighting plan and it wasn't supposed to exceed so much lumens per square foot, things along those lines. Doesn't happen very often, which is why it's not a big dollar amount, but they do happen.
So it might be something in a conditional use permit that says you're going to do X, and we actually have to go out and look at it once in a while.
Yeah.
Okay, gotcha. Okay, thank you. If nobody else has any questions on that, we'll move on to revenues from other agencies.
So this section compiles a lot of different kind of money from state and federal agencies that the city receives. Some of it's ongoing, some of it's one-time, like the Office of Traffic Safety grants that the police department got. So those were for particular DUI enforcement or other traffic enforcement. So they apply for those. We'll have matching expenses in the police department, and then we'll recognize those. We typically don't project those types of things out unless we already know that we have that grant in hand. Some of the other things notable, the SB 1090 economic development money that we got in last fiscal year. So that was related, both of these are related to the PG&E settlement. So this is for the Economic Development Council, allocated $125,000 of this amount toward help with bridge works. Some of this funding is going towards our new position in community development to help economic development and things like that along. And then we also have this other component, which is the essential services mitigation. So it's about $45,000 per year. This 90 here is 2 years worth, and it's a 9-year revenue source. So have a few more years at the end of this cycle for those revenues that come in. So that's just, as it sounds, to mitigate some of the essential services with not having PG&E online would reduce our fees.
Is the 80,000 school resource officer from the school district, where they're paying essentially for half of the position, or what does that?
Exactly. That's
Okay.
exactly it.
I just wanted to mention that one. It's been $80,000 flat. While it pays a portion of a police officer, it certainly does not come close, but the theory was that it saves some of our officer time. We would like to get them closer to, move them up and have them pay more of their fair share. But with the brand new police chief, the first time he had interaction with the school district, it wasn't, hey, I'm Chief Masterson, give me more money. So we're going to be working on that over the next 2 years.
Yeah. Okay. Got it. Thank you. If no questions, well, I guess there's still more on the next page.
Yes, just a few more, just a couple of highlights. The CARES Act money that we received, we received that 300 and something thousand. It's kind of split for accounting purposes over the 2 fiscal years, but that essentially paid for the services of our public safety for a month or so last year during the COVID thing. And then this is the SAFER grant that's paying for a portion of one of our firefighters. Next year will be the final year of that grant.
Okay.
And I'm happy to go into services if there's no further questions. Okay. So
No
these
questions. We'll go ahead and go on to charges for service.
Perfect. So these are kind of sectioned out in different types. So we have safety and development, recreation, that sort of thing. So this is essentially the services. Most of these are, well, I guess not this section. Let me rephrase that. So the first response charge to begin with is the ambulance fee. So it's similar to what we have kind of the franchise fees. So their benefit or their ability to be able to provide services in the city. So the city does receive funding for that.
Let me correct that just really quickly. Sorry, Jerry. This is a fee paid to the city because from the ambulance company, because the ambulance company's contract requires a certain amount of response time within a certain number of minutes of advanced life support. They can't always make that. So our paramedics responding, the time clock stops as soon as either the ambulance company or our paramedics get there. So if we ever eliminate a paramedic program or reduce that or something, this revenue would certainly be affected.
Thank you for that clarification, Michelle.
How is this calculated though?
It
How do you know how much you're charging the ambulance company this?
We are charging the ambulance company as part of the ambulance agreement for the county. So there's one ambulance agreement for the county. It was based on the number of advanced life support and basic life support teams that we had by jurisdiction at that time. So
I mean, it's not based on a case-by-case basis that,
No.
you know, it's based on but it's calculated up front
correct.
based on some formula.
Yeah.
And in other words, they know how much we can give them a bill at the beginning of the year or the end of the year and say, here it is.
Yep. We don't even have to do that. They just ship it. It's a formula and then it's based on CPI.
Okay. Very good. All right. Thank you. Go ahead, Jerry.
Thank you. So the weed abatement, this is the cost for, or the revenue. Hopefully we won't have any. We always hope for 0 on this one, because that means that everybody is abating their own weeds and we don't need to go out and pay for the abatement on people's properties and then request reimbursement for that through the property tax bills. So we kind of have this flat fee based on what we have historically done and how the fee is set up with a base fee plus a percentage. But on this one particular fee, we always hope it's lower because that means everybody's doing their weed duties. So the communication site lease, we have 2 radio sites at one at Castle Rock and one at Rojo Peak that we rent space to the state and the county. And so we receive a little bit of funding for those rentals. False alarms, these are for when an alarm goes off on a building. There's 3, the first 3 are free during the year and then subsequent ones are billed. Mutual aid. So we had significant mutual aid in the current year. So this is reimbursement from us going on those mutual aid assignments. We usually start with a base of $250,000. There's revenues and expenses that are related to this. So we just kind of start there and hope for a low fire season. But obviously earlier this fiscal year, we had quite a lot of activity.
So Jerry, on the mutual aid fire revenue, is that the total mutual aid fire revenue? including, the direct reimbursement for the, cost of the firefighters' pay? Or is that, plus the administrative charge, or is this just the administrative charge and the revenue, for the fire pay, it shows somewhere else?
This is kind of all of that
This is
combined.
all of it. So this would include direct reimbursement. I mean, if we spent $1 million on firefighter overtime going off on mutual aid, if, 100,000 on equipment charges or whatever, and then 150,000 of administrative charges, that would be all rolled up into this number.
Correct.
Okay, gotcha.
But
And what is the current administrative rate that we're allowed to charge? I mean, if we spend $1 million or 900,000 in fire overtime and 100,000 on equipment related charges for a total of $1 million, what are we able to charge administrative overhead on that?
There's a 10% flat fee that you can charge, or you can calculate your own if it's more than 10%. I think ours is 18, but don't quote me on that. Cindy, do you know if that's true?
Well, 18 used to be the common number that was tossed around. Yeah, but I thought they limited. So if in order to charge 18, you've got to justify 18 though, right?
Right. There's a big calculation you have to work through and to determine that amount.
Got it.
It's, the admin's not a
Okay.
moneymaker
And,
for us.
but we are going through that. We are going through that justification though, and we're charging more than 10%.
Correct.
Okay,
Correct.
got it.
so I'm assuming, Jerry or Rochelle, that if there was another bad fire year, for example, we would probably get a lot more than the 250,000 in mutual aid.
Right.
But you'd have to do a budget adjustment, the council would, to probably add another several $100,000 in expense for the fire department and gas and overtime and things like that. You're not going to make money on mutual aid, but
Well, yeah, you might make some on the administrative overhead.
yeah.
Although and theoretically not, because you have to calculate and justify the charge.
Yeah, it is a pretty significant administrative burden. I mean, you have to do a lot of hoops and tracking and manual overrides and stuff to do it. So whatever we get reimbursed, is probably what it costs us. Jerry, as far as bringing it to the council historically has given staff the authority, if there's a revenue and expense that are directly tied to each other, so that as we bump up the revenue, we can bump up the expense without having to go to council in an equal amount. I couldn't bump up, planning revenue and then bump up fire training, but I can for mutual aid, as they're directly related to the same thing. The activity level's just higher.
Yeah, I had forgotten that. That's a little wrinkle. I'm not sure all the cities have it. The counties certainly don't.
Yeah.
Counties
It's a
have,
lot of admin taking all that stuff to council all the time.
counties have a much stricter budget law that's in the state government code.
Bring him in at the register.
4.63.
Okay, if no further questions on that, we can move on to some of the smaller revenue sources.
I have one quick question on the DUI. I mean, considering how expensive they are. Yeah, it looks like we only had $102 on the 20 year. How is that fee derived?
If you can tell me, I'd be, the courts figure all of that out, and they figure out how much we get out of every ticket and fees, and it's just not a lot.
I'm surprised that it's that low, even if it's only a few people getting busted a year.
Yeah.
Okay.
Yeah, it is, but the courts and the probation department and the health department, and the state takes a ton of money out of those. So you're right, Mark, those are huge.
Yeah.
Don't ever get caught drunk driving if you want to go bankrupt or something.
Yeah, really.
Yeah, it's costing somebody a hell of a lot
Yeah.
more than $102, but somebody figured out at the end and say, oh, well, let's send $102 to a Tascadero. And the court kept 10,000,
Yeah.
Yeah.
Okay, fingerprints.
A. So just a little more police-based services here, just reimbursement and things
You know
for
what,
running fingerprints through the.
Right.
Development here, again, development of construction, that type of development, zoning fees, subdivision, all these different types of development-related fees that are reimbursable to costs that the city is incurring.
I assume you get your information for these projections from Phil, in terms of, anticipated things, known things, anticipated things. And of course, some things are unknown because you might not be aware of any general plan amendments or something when you do the budget, but then 3 come through in a single year or something. But given that we have a couple of general, and maybe I'm misjudging where they land here, but general plan amendment requests, I'm surprised that the general and specific plans are blank in the budget years.
So a couple of reasons for that. Typically for general plans and EARs, assessment district formation, those types of things, we normally just don't budget any for those because like you say, sometimes we have them, sometimes we don't. That's kind of our standard go-to. And as Rochelle was discussing earlier, in the event that we have those, we're charging who's ever requesting those for the fee. So we do have a revenue and an expense that we can adjust the budget with equally. In addition, since we are going to look at the general plan coming up, there's kind of that topic too. Are these going to be something that'll be put off to kind of go with that all together? So those 2 reasons for that. And yes, I do generally get my information from Phil as one source. Phil is amazing. He's awesome. We love him. He's very positive. So I tend to kind of take what Phil says and dial it back a little bit. Just because he has a lot of passion for some of this stuff. But I'm a little bit more negative than he is, and so I pull back a little bit on some of those numbers.
Got it.
Anything particular we want to discuss or just kind of go through?
Yeah, I'm wondering stormwater permit compliance, you budgeted 10,000 showing 0. That's just because it seems like everybody, builds anything, they gotta have a stormwater plan, which I assume the cost of that would fall under here, or not the actual cost of doing it, but getting the permit. I'm surprised that we're projecting no revenue there.
Right, and that's a newer compliance piece that has come about. We have been more short-staffed too in public works, especially in kind of the zone. So it's been complicated to have enough staff to go out and do some of these. And I'm trying to remember, Rochelle, do you remember, is this annually for everybody kind of a thing, or is this specific development related? I can't recall.
I can't recall. There's so many new regulations coming down the pike all the time on stormwater. It's hard to remember what's what. So I apologize.
Yeah, and I don't know if I'm building something in our city, am I paying that fee to Atascadero, or am I paying it directly to Region Water Quality Control, or am I handing it over to us and we're handing it over to,
Yeah.
Water Quality Control Board, and therefore, and therefore it's kind of a pass through and there's no direct revenue.
I think this one in particular is our staff going out evaluating some of the instances.
Yeah, I was gonna say, I don't think the stormwater permit compliance has anything to do with Regional Water Control Board. This is more of just a permitting thing. And so I can see our staff just taking care of it.
But yeah, I agree. We're going to take care of some of these. Regional Water Quality Control audits us on those. And so I think we've been dinged because we haven't been following up as much as we should, but yeah,
Okay.
we're working on all that.
Jeff, did I see you have your hand raised, or are you just scratching your eye?
No, I thought we actually discussed this one at City Council a year or 2 ago, and I think it was tied, if I'm not mistaken, to us as a fee in the downtown on what we had to pay to the state. And I think that's why it was budgeted when you
It
did
was,
and all the other.
yeah, we were hoping to have that. That was a mitigation fee. To, if you couldn't provide the stormwater improvements that were required on the site, that you could pay a fee in lieu of doing those. We are having problems with the Regional Water Quality Control Board in them actually approving that plan that was submitted, as you said, over a year ago. So we're having some difficulty with that. And that could be part of this too.
Okay, I think we're ready to move on to more charges for services on page V13.
Okay, great. So recreation really took a hit with all of the COVID closures. So really, there was nothing to advertise in our books because we didn't have any programs running because we weren't eligible to do that. We were able to pull off a few youth sports activities with distancing and things like that. So that was good. We do look to kind of come back to a more normal the next 2 years. Classes, you know, all of these items were just really kind of depressed during the COVID time, but we are expecting to kind of mostly come back next year and then kind of fully on the following year. The same with the Colony Park Community Center and the pavilion, just really depressed revenues from all of the effects of COVID.
And right now, not so much a budget question, but Rochelle, do we have a kind of an opening date when we can start doing, you know, rent out the pavilion, have youth sport activities inside the community center?
It
et cetera?
is, it's based on the state. So as we move between the tours and as the state allows different activities, we are opening those up. So you are able, we're having weddings at the pavilion right now. Yay. Since we moved in the orange tier, we can do that. There are obviously a lot fewer people. People have to jump through a lot more hoops. They have to certify. Everybody was screened, either tested or fully vaccinated before they can attend the wedding. So yes, those things are open. There's a nice table on recoverslow.org and the state website that shows which recreation
So,
activities
but I mean,
are
it's
allowed.
starting to happen.
Yes.
Excellent. All right.
Okay,
Meeting.
this administrative piece here, generally related to the permits, that whole development process, mailing fees, document imaging, that sort of thing.
So
And- Sorry.
generation of labels, didn't know we had a moneymaker there. What's that about?
It's not a moneymaker, it's just really much of a cost. So when a development is
Okay,
you know, coming
notification.
along, we need to send notices out to the neighborhoods and things like that. So that costs money to generate all that stuff.
Got it. Okay.
Let's see, going on parks. So similarly with parks, I was really hoping that we could see some park revenues, that we'd be able to rent out park stuff during COVID since it was outdoors and things like that, but that wasn't really a possibility. So again, not much in the way of revenues for the current fiscal year. The zoo is a whole nother story. So the zoo was open limited hours, but when they were finally able to open, holy cow, did people go rushing over there. They went there, they flooded the zoo. Well, not flooded the zoo, I don't want to say that. There was a lot of people that went. We complied with all of the limitations and people and all that. But there was a lot of sales. They couldn't keep things on the shelf in the gift shop. So we really saw a great response of the zoo, even though we were closed for a huge portion of the fiscal year. So it's really exciting. A lot of memberships to the zoo are being sold. That number is just higher than I had anticipated. So that is good news. And when we did the budget last cycle, and since then we had increased the zoo fees by 33%. So all of the current year and the 2 out years do reflect that 33% increase in admission fees that the council adopted way back when. So.
Gary, that is interesting to note, that revenue is actually up, and Zoo Gift Shop up as you described. What is sales? Just $100 projected for this year. What is that as sales?
That's rental of the strollers.
Okay. And then speaking of above that, back on parks, on the reservation charges, which park facilities do we charge rental for? Are we talking like the baseball field with the lights, or what do we?
Barbecues, the barbecue sites and things like that, the reservation areas, I think they call them. So like the table and the barbecue and stuff like that. So there's a number of different parks that have those facilities and you can rent those.
Got it. And Jerry, it's not reflected in one particular place in the budget, but if you take, these revenue figures for the zoo, and then elsewhere under, general fund expenditures, what typically the net operating loss for the zoo is it about 400,000 or
It's around 600.
is it around 600? Okay. I always forget whether it's $1 million in costs, 600 revenue, $1 million in costs, and 400 revenue, but it's more like $1 million in costs, 400 in revenue is more typical, right?
Mm-hmm.
Okay. Good to know.
All right.
Okay.
So fines and forfeitures, most of these are police department related types. There are some fire department fines, code enforcement, that sort of thing. And then of course, insufficient funds. So people that pay by check and their check does not clear the city's bank account. Late fees for business license, and then of course late fees for both cannabis or transient occupancy tax. Interest.
The TOT penalties are all associated with the repayment agreement with particular hotel then?
It can be other things as well. So there is stipulation in the ordinance that says that if they're beyond a month late, then penalties and interest are incurred. So that's both for the city's TOT, for the TBID funds that will go into the TBID fund, and there's also charges for the slow TMD that we pass along to the county, or not to the county, to the.
And these are all small potatoes things, but it just gets me wondering, city parking fines, we don't have timed parking. Are these fines for people parking in a no parking area or violating the 72-hour parking in one spot rule, or what are those?
Generally, I think they're, parking in the red zone and things like that.
Gotcha. And code enforcement, we're actually collecting a small amount of revenue from code enforcement fines. So our code enforcement officer, he can write code violation citations, right? And then, and those are treated like a regular citation and
correct.
Pay up, or you get a court date at some point. Okay, gotcha. Got it. Thank you.
On the TOT tax penalty, is that not normally budgeted or projected because you just won't know until afterwards, or is?
Yeah, we're hoping everybody pays on time.
Okay.
It's for non-payment or late payment, and then
Right.
Yeah,
the council did approve the extension of time to pay last year at this time for the COVID stuff. So.
But in the previous 2 cycles, we 50,000 and 33,000. So we did obviously collect something.
That was kind of a special circumstance for those. It's not something that's planned to be ongoing.
Okay.
Yeah, it's one you hope the answer is 0 usually. The fact that there's big money in those represented a problem. That was
it's like any
resolution.
Well, it's like any penalty. You don't want to see anybody do anything wrong, but if there's a history of a certain amount that you're going to collect each year, that's why I was just wondering why there's no numbers in the budgeted and projected, if those were just special circumstances. But
yeah, good point. Thank you. Okay, so investment earnings. So all of the money that the city has is collectively invested. City Treasurer Seebach does a great job of making those investments. We take all of the interest that is earned on those investments and we allocate it out to each of the different funds based on cash balance and that sort of thing. So we typically, right now we're looking at, it's around 1.8-ish% return for the current fiscal year. We're estimating somewhere in the neighborhood of probably 2% for the next couple of years on return on those. We do have that big number here in the adjustment to fair market value. We are required by accounting rules to make an adjustment at the end of the fiscal year of all of our investments to the fair market value. So it's a paper change. Effectively, it would only affect us if we were going to cash out everything every June 30th, which we don't. So we are required to reflect that in our financial statements. So that's what these big numbers are. Sometimes they're going to be positive because the market is higher than our investments are the actual value of them. Sometimes it's lower. So this will change, go up and down. In theory, we don't know what that is, so we really don't budget for that. That's,
Yeah. And that adjustment number could very well be negative, and it wouldn't be alarming,
right.
you know, if it was a negative number. What I am curious about, though, Jerry, is, I mean, I do know that, you know, certainly interest rates are very low right now, but our, you know, pooled investment interest revenue, you know, 132, 162, and then we're saying 55 for this year and out years. That seems particularly low.
Yeah,
And
and
if we're making 1.8 on our general fund balance of $10-ish million or so, it seems like that should still be in the 150 range or something.
right, and we'll adjust that as we kind of go forward and kind of get things settled a little bit, but that's kind of a target for an initial target, and then we'll kind of.
Is that, yeah, that seems particularly low, even in this interest rate environment. It seems, you know, like half or less of what it should be. But
I
okay,
think the trend is now on the upswing as far as interest rates, but in other words, I think we bottomed out on the rates. They got to near zero, as you probably know, but they're creeping up a little bit now. But the Fed,
yeah.
has,
Well, I mean, if we're averaging 1.8, even if we,
well, that was because we had a lot of stuff we bought 5 years ago or 4 years ago. And the ones that we purchased in the last couple of years are carrying nowhere near 1.8. But the Federal Reserve one is going to keep them low because until inflation kicks up, and the president and the Congress want to keep interest rates low because they're borrowing like drunken sailors, as you know.
feels like we've been in a low interest rate environment for 10 years now.
Yeah, but it's lower than it's ever been in
Yeah.
my recollection now. So, but
yeah,
because they're passing $2 trillion unfunded bills and everything, you know, they're borrowing for that, and the saving grace for the federal budget is that they're borrowing at such ridiculously low rates. They don't want to see them. So I don't see. I'm saying the trend is going up a little bit on our yield rates, but it won't be very steep, and it'll be very slow increase.
they're going to do everything. They'll do everything they can to keep it relatively low.
Right, unless inflation really kicks up a lot, and that doesn't seem to be happening.
Yeah. Okay.
Okay. Moving on to other revenues. So this is kind of some other miscellaneous type things. So workers' compensation reimbursement, when we pay out for workers' compensation for employees that are qualified, and then our comp carrier refunds that back to us. So that's that. let's see, SB 1186 disability access is funds that I believe it's $4 now that is on the business licenses. So we are eligible to keep some of that for education, administration of ADA type issues, and some of that gets remitted back to the state. So this is the city's portion that can go towards education and other items. And then just some kind of general things here. This Zoological Friends, Zoological Society, previously known as the Friends of the Zoo, previously known as Zoological Society. This is the contribution for the memberships to the zoo. So that is split between the Friends and the city. So this is our contribution for that. As you can see, pretty generous during the COVID time. So we're excited about that.
Jerry, do you recall what the pavilion donations were for? 6,700 is reasonably sizable.
I don't.
All right. It's water under the bridge, just curious. So,
I'm sorry.
okay.
The next section here is interfund administrative charges. So this is the overhead charge that gets allocated to the different departments, and then to the redevelopment agency and the moderate housing fund, technology, public works, that sort of thing. So this is revenue generally that's coming back between city funds. And then we also get the CDBG administration reimbursement back to us for the work that we do for the assessment districts. And then the 1% for the TBID administration and 2% for the SLO TMD administration.
So Terry, on the bigger numbers here, the general overhead allocation, is that mostly from the water fund, wastewater fund paying, the general fund for overhead services, or who is it?
Wastewater, streets and transit, I think.
Okay. So your other specific funds are paying.
Include also building maintenance and things like that. So one of these.
Okay. And then, okay, these service charges to low and moderate income housing fund, I think, we've talked about at different times how it's a relatively significant charge relative to the balance. That's for administering the deed restricted properties, which is primarily done out of your office, right?
Right.
Okay. Okay. And then the service charges or public works allocation to other funds. Is that, again, public works stuff being done for like wastewater and other folks?
Exactly. So that's Nick's time that he spends on wastewater and that sort of thing. Some of the staff.
Got it. And service charge to capital projects would also be then service charges to non-general fund capital projects?
Right.
Okay. Gotcha. Okay. Thank you.
Okay. Any other questions on this piece? Here is the transfer in from the Community Facilities District that we talked about at the beginning of this meeting. So the funds that are on folks' property tax bill go into the Community Facilities District Fund. And then from that fund, some of those dollars come back into the general fund to represent ongoing costs of police, fire, and parks.
So Carrie, in that regard, so we're projecting to transfer close, well, in 22, 23, $700,000. I don't know what the, revenue, but I assume that the revenue into the fund is in that neighborhood, 700,000 plus or minus something. What is, how much balance is carried in the fund to which the, the property taxes are originally paid?
Not a lot. We try to clear that out, I think,
Okay.
last couple of years, so.
Got it. But I mean, since you're basing it on theoretical expenditures, it's not going to be like, oh, we collected $701,023. You're not going to charge it. You're not going to transfer $701,023 to the general fund. You're going to, because you have to calculate the expenses, right?
Right, so that's done upfront. So we calculate what we estimate the costs are gonna be, and this typically doesn't cover all of our costs, and then we submit it to the county in June. So then this would be the whole next year, so we have to do it in advance.
Okay, and so the county keeps the fund basically then?
Well, the county charges it to people's property tax bill, and then it comes through to us like property tax payment. And then we put it in our own city fund that is the Community Facilities District. County is just the collecting arm for us.
So do they send us all of the money every year then?
Right.
Okay, and then we sort out, okay, the exact charge. Okay, got it. Well, that's the end of our pages, right?
That is.
Well, is there anything else you or Cindy or Rochelle would like to add? Or are there any further questions from our committee members and or member of the public?
I was wanting to make a general comment. If anything in this whole package, and it's a very difficult thing to project out even 1 year in the future, but 2 years in the future is tough. But I have just been through, I'm almost done with a sale of a piece of real estate in Atascadero and a purchase of a piece of real estate in Atascadero. And the real estate market now is the most overheated, crazy. I've talked to realtors and stuff. They say that even in their lifetimes, they've never seen anything like it. So, the property tax, the building permits, your plan check fees, construction costs are through the moon. Some of you guys probably know more about it than I do on that, but I'm hearing people can't even find lumber or concrete. And so that is going to be, with people wanting to move here from Silicon Valley and paying this, our house is being sold to somebody from San Francisco, the house that we're selling. And I just think there's no way you can know how all of that's going to happen, and it could crash. This could be another one of these bubbles that 6 months from now, it'll be a disaster in the building and the real estate market. But right now, it's absolutely crazy, and people are offering way more than asking prices and getting it. Our next door neighbor sold their house in one weekend and got $65,000 more for it than they were asking. And somebody paid cash. They just came with a pot of money from the Bay Area or something. And that's what's happening. So
well, as you said, Jerry, it's hard to predict, but I mean, I think Jerry's estimates, in cooperation with the county though, are pretty conservative, so that if we continue to see those high sale prices, we might see more than a 4% increase in property tax revenue. But it's good to budget conservatively and be happy at the end.
Tax has a lag, quite a lag, because it's it's assessed as of a certain date, and then it can be a couple of years before the full impact hits of increase. But the building industry and your permits and stuff in your planning department may have to put people on, when they get, and I'm sure they've done this in the past, hire temporary contract folks just to jam those permits and do the inspections. And Rochelle, I was going to complain about the sewer fees when you're raising the sewer fees, and I'm just teasing. I recommended you raise the sewer fees a couple of years ago, I know. But I thought by buying a house that had a septic tank instead of a sewer, that I'd get out of paying the $500 a year to the city. Well, first thing we had to do just yesterday, we had a new septic tank put in for $7,000 at our new house. So,
Well, just consider yourself lucky if you didn't have to deal with regional water quality control on that. Because they would love to make it more expensive and time consuming for you.
well, the city, another funny thing, maybe I think it's funny. The city, I didn't know they had to be inspected. So you tear out the old septic tank and you put in a new one. You got to get a city permit. And of course, that means a city inspector comes and looks at it a couple times. Well, the final inspection, which was yesterday, he came out and he inspected, it was fine. And he had a flat tire. So my wife was watching the poor guy out there trying to change the tire. And I said, he didn't call anybody? No, he's out there doing it himself. So.
Okay. All right. Well, with that,
I have one quick question if I
if
could.
we have no further questions or comments, Jerry, can you just tell us what's on our next week's agenda?
Jeff has a question.
I got
Okay, Jeff, go ahead.
in the bottom of the budget under donations, what's the $1 million donation for fire?
Wasn't it 100,000?
I thought it was $1 million.
Well, a couple years ago, we got $1 million from Bertha Schultz, but
Oh, okay, maybe that's what I was looking at.
I'm assuming that the 108,000, Jerry, is a remainder from Bertha Schultz, the expenditure of Bertha Schultz money, or what is that? 100,000 last year, 108,000 last year or 2 years ago in fire donations?
I'm looking for it. Yeah, that was related to the Schultz donation.
Awesome. Thank you.
You're welcome.
Okay. All right. So Jerry, what's up next week on our agenda?
We are planning on doing other funds, so non-general fund, the wastewater, transit, those types of funds, going over those. And
Okay.
then we'll go to the rest of the general fund pieces in the last two meetings.
Okay, then.
We got
All right.
2 more
So
meetings to go, or 2 more meetings.
I think we have 3 altogether.
Oh, wonderful.
Jerry, you signed up for this high-paying job, you know?
Yeah.
They didn't tell me this is part of the job, I have to admit.
It's every 2 years.
Doing this, it's the only
Exactly.
time she gets to share numbers in a positive way normally, once every couple years. She's loving every ounce of this.
Yeah. Say it's only every 2 years, so you have to amortize your time investment here over a 2-year period.
Right.
Hey, really quickly, for minor tweaks, as she says, we don't have all the labor plugged in. We're still working through negotiations and settling on that. Do you need to see those interfund allocations if they've just changed by, small amounts? We don't really need to re-see them, do we?
You mean revisit them?
Yeah.
No, I don't think so. I mean, those are calculated numbers based on accounting formulas. They're going to be what they're going to be. So I don't think that we would need to re-see them. They're not going to change materially, I would assume. And
No,
Well, you're taking money out of one pocket and put it into the other pocket too.
Yeah.
that's
It's
it.
not a real huge policy matter.
Yeah.
No.
yeah, I mean, if the number changes from 100,000 to 115,000
Well, that would be a big, change.
or 108,000, it's not affecting the city's finances actually. So, okay. Well, with that, anybody have any further comments? Otherwise, I think we'll call this meeting adjourned and see you next week. Same bat channel, same bat time for those of you old enough to get the reference.
Yeah.
So, okay, then. I think we're all out of here.
All right.